Hey there, welcome to the ribbon trade. This video I'm going to explain how the ribbon trade actually works. This is the short-term time frame. And I'm going to show you the setup, what we need to see. Price needs to pull back in a certain way, what it needs to tag or touch, and then how we get into the actual trade itself. So what we're looking at is these set of moving averages right in here, the 13 down to the 5. Now, in order to really take a good look at that, I am going to momentarily get rid of all the other indicators, just so we can focus on the ribbon itself. I'm also going to get rid of the grid right now, just so it's not in the way, and that's the current price line. So this is the ribbon. This is the short-term trend, and it is a very short-term trend. It will change quite regularly. But when we're looking at the short-term trend in conjunction with a longer-term trends, this thing works really nice. Now, a ribbon trade will occur as price moves forward, pulls back, and then moves forward again. We're looking for that zigzag in the market. Now, as you know, when a trend happens, it doesn't move from point A to point B. It moves from there, but in between, we've got zigzag, zigzag, zigzag. And that is the short-term version of capitalizing on that zigzag. So we have price moving up, gives us a nice separation in the ribbon here between the 5 and the 13. Price then pulls back and then touches the 13 exponential moving average. This is the red. If price can touch it and then close back above the 5 EMA, which is the yellow one here, on the properties box, it's called gold, I think. And then closes above it, then we are good to go for a trade. Now, this is something that you want to maintain a trend with. Now, we can see how this works out really nice in here. We have this ribbon phase. The trend is up the whole time. We've got the 5 over top of the 13 the whole time, all in this area here. We have price pulls back, touches or closes below, which is fine. If it closes below, it just needs to touch it. Now, if it touches it with a wick or if it touches it by actually going right past it, that is cool. Nothing wrong with that. What we want then is price to reverse, come back, and close on the correct side of the 5. In this case, it's up. So we're looking for price to pull back, close on the upside, and then from there, we can look to take a long trade. We'll see in this area here how they don't really work out. We have some market movement, but getting in on this, very, very, very difficult. What happens here is the trend changes. Again, it's a short-term trend. We want the trend to establish, and then we're looking for a trade. Here, the trend establishes itself up. We get the trade as it closes at or by or touches the 13, closes above, and off we go. Here, the trend changes. The short-term trend becomes down. We cannot take any trades in here. This doesn't work out so well. Here again, price pulls back, but it pulls back so far that the short-term trend direction changes. So it becomes down again. So taking these trades becomes quite risky business. Where here, we get the trend moves down. 5 is underneath the 13. Price pulls back up, touches the 13 EMA, closes back below the 5, and then we're off to the races. We got a short trade right in here. Now this again is very short term, and it does change. It does bounce around. That's why we don't like to trade the ribbon on its own, simply because it is such a short term trend and it does change direction quite quickly. Here we have another example. We've got a long trade here. We've got not a long trade here because it closes down below, but there's one here, touches the 13, moves above. Price, this whole area in here is trending, except for this spot right here. We have 5 moving down below. But we've got a trade, a trade, a trade, no trade, a trade, a trade, a trade, and a very small trade, probably a loser trade here at the very top of the whole process. Parabolic dots would have filtered that out for us, but you can see what I'm talking about though. As long as the trend is intact, the short-term trend is intact, then we're able to take these trades. And again, it is very short-term, which is why we don't like to trade it on its own. We prefer to have at least the medium-term trend to kind of get an idea what direction is going to hold, what direction is more suitable, which one has the momentum, as it were. But this is the ribbon trade. Now you can trade it on its own provided this is the setup you're looking for. If you're going to be patient and you're going to wait for these setups, as long as they're in the right direction of the trade, they don't crisscross, then you can make little profits out of these. They will work for you. Here's an example where it didn't work. Price came up, touched the 13, closed back below. This gray candle closes below. This one didn't go anywhere. Eventually, it did move in that direction, but again, the other indicators will come into play. Right now, we're just showing you how the ribbon itself functions. Now, you might ask about these dotted lines in the middle. Why are they there? I like these dotted lines in here so I can see some separation. I like to see that the market has at some point separated. And the best way that I can do that is by being able to visually see the dotted lines in there. If they're all scrunched up like they are in here, you don't get a good separation and you can't see the different lines clearly, then a trade we might want to consider not taking right away. We want the trend to become a little bit more established. That's why we have the dotted lines in the ribbon. Once we have the separation and you can clearly see the different moving averages inside the ribbon, we know that the market is moving. We know that it's moving fast enough to pull these two moving averages apart to show us the ribbon. The trades in that direction then become a lot more probable that the trade is going to work out. We are looking for the highest probability trades as far as all of this goes, and that is one great tool that I've learned over the years that will help. Because they're such fast moving averages, this is the 5, the 13 is almost 3 times slower, or the 5 is 3 times faster almost than the 13. There's enough difference between the two that this separation does show up fairly quickly. Once the price starts moving, you will see this separation fairly quick. And that is why the dots are inside the ribbon. All right, well, I think that is pretty self-explanatory. If you like, I can go through it just one more time very, very quickly. We want to see the 5 over top of the 13 for an uptrend. Price pulls into the 13, closes above the 5 for a buy signal. Never during that buy signal formation do we want to see the 5 cross below the 13, like we see here. Has to maintain that trend. In a downtrend, the 5 underneath the 13, price pulls up, touches the 13, closes back below the 5 for a sell signal. Never do we want to see 5 cross above the 13 like we see in here. That becomes a void of the trend. The trend in this case is down. Here the trend automatically turns up and then it turns back down. So we don't want to be trading when this crossover happens. In conjunction with the longer term time frames, the crossover down does represent the beginning of a new trend. And if we're using it with the other moving averages, this actually can become a signal. The crossover in the direction of the trend can become a quicker moving average signal. Now, I'm not going to touch on that too much right here. I just want to show you how the process works. The pullback, the touch of the 13, and the close below the 5, and the trend. We have the crossover in the wrong direction and then the crossover in the right direction. The right direction is in the direction of the longer term trend. I know traders that take this signal all by itself. That's the only thing that they're waiting for, is the crossover up and then the crossover down. We are going to get instances where the crossover up is going to make you sit through a little bit of agony. Here we get the crossover up. This could potentially be a long signal, provided that the longer term trend is up, that the 13 is over the 34. The crossover upwards can become a signal. Here we have one. And here we have one. Market does move in that direction. So it's good. I mean, as long as it's working with the longer term time frame. But this, we're focusing on the shorter term. That's what we're looking at, short term time frame. And this is the ribbon explained. All right. The next video, I'm going to show you some trades, some ribbon trades. We're going to show you with the DPI and with the parabolic SAR. And we're going to have the other term time frames as well. So we're going to be taking the trades in the right direction based on the other term, the medium term and the longer term time frames. But the trades we look at are going to be ribbon trades. They're going to be based off of these moving averages, this little set of indicators. So join me in that next video. We're going to have a video for buy trades. We're going to have a video for sell trades. So it'll be short. So I'll see you in those videos. You take care, and I'll catch you there.